Most entrepreneurs have no problem coming up with big ideas for how to start a new business. Despite this creative spirit, studies show that nearly 90% of all startups fail within the first 5 years. For many of these entrepreneurs, their problem is not their big ideas, even it is not the goods or services they offer. Instead, it all boils down to how they handle their finances. After all, without a stable financial footing, even the best of businesses will not survive. Hello there. I'm happy and excited to see you here. My name is J. Taiwo Popola, and I work for Taisha Associates. In Taisha Associates, we help entrepreneurs and business owners like you to build and grow their businesses through the instrument of accounting and bookkeeping, taxation, business plan, budgeting, forecasting, audits, whether forensic or statutory, and also company secretarial services. Today, I'd like to share with you on top 5 accounting issues entrepreneurs need to overcome. Well, why are we discussing this? We are discussing this because finance is always a tough issue for small businesses. And of course, when there is no finance, there is no working capital to grow the business. So we are sharing this topic today in order to ease your finances and to make room for working capital for your business. Today, I'd like to go over 5 points. Number one, the number one thing that is common to most small businesses and is giving problem to their finances is overshadow the line between personal and business finances. Many entrepreneurs and business owners make the mistake of mixing their personal and business finances together. When starting a business, this small error or mistake may not seem important at the beginning, but as your business grows, this overshadow thing became more pronounced, and in fact it serves as a real problem hindering the growth of your business. It is vital that you create separate accounts from your business and yourself. Separate your finances from your business finances. In a later episode, we will actually show you how you can determine your financial needs so that you can actually separate yourself from you can actually separate your personal finance from your business finance. Well, this always causes a lot of problem, especially in the management of working capital, and that's the reason why you need to separate your personal finance from business finance. Everything from the business must flow through the business account so that you can achieve the greatest financial benefit. Number 2 is disregard for accounting practices. Most entrepreneurs will admit that they are not expert accountants. Yet, these same entrepreneurs try to handle their finances in-house. Some of them will want to take care of their bookkeeping, and even where they are not, some of them override the suggestion of their accountant when it comes to financial decisions. This costly mistake forces startup founders to focus their attention on things like payroll and bank reconciliation, rather than solely focusing on how to grow their business. A trained professional will ensure your records are up to date, record transactions properly, and keep track of your accounts, receivable and payable. This will allow you to spend your time and resources into expanding. Number 3, declaring revenue before final delivery. Declaring your revenue as soon as you make a sale can be a dangerous practice to start. It makes your books look good, better, at least at first, but it does little to show the true profits. The problem with counting your revenue too early is that you overlook the expenses that go into the final delivery. We have been able to see where a company overlook the cost of transportation to deliver a good, which is essential part of expenses incurred in selling the goods. Whether you are selling products or services, you should consider your expenses before you can determine your real profits. You put your startup in jeopardy when you start making business decisions without seeing the full picture. So common that even not only startup, even ongoing business, they overlook expenses. This is as a result of inadequate accounting. Mismanagement of capital expenditures. Number 4, you have probably heard about many startups that are doing well, they are making money, but only to be forced to shut down. The question is, where did these successful entrepreneurs go wrong? One mistake many entrepreneurs make after successful operation is that they go on spending spree with money from their cash flow. They believe they are now making money, and so they can afford to spend money anyhow. This tactic is especially dangerous when you are purchasing a high value items that can depreciate over time. Using cash for this type of items not only puts your business in danger, it will not make you to have financial stability, but it can also hurt you when it comes to tax time. It is better to keep this cash in hand and take out a short-term loan, or even consider leasing. You see, as a business that wants to expand and you need a high value capital item, what you need to do is to seek for a higher purchase or a leasing facility or a short-term loan. It is not in the interest of the business to just dip your hand into the purse of the business and pull out a huge sum, because working capital is critical to the growth of any business. Number 5, failure to analyze your financial statements is another issue. You can have a detailed budget, a detailed business plan, of course, which is the normal standard practice for any entrepreneur starting a new business. However, many startups and even established businesses owners fail to regularly assess the status of their business. This limits their ability to modify the budget or business plan as the business grows, or to detect potential problems looming in the background. One of the best benefits of working with a professional accountant is that they can provide you with up-to-date reports that allow you to analyze the financial status of your business. Based on this valuable information, you can set effective long and short-term goals that are in the best interest of your business future. Avoiding this common financial mistake can reduce your risk of becoming part of the 90% that their business always failed within the first 5 years. In fact, staying on top of your finances may help you grow your business and become part of the 10% of startups that succeed. Let me just quickly recap what we have discussed. We have talked about top 5 accounting issues entrepreneurs need to overcome. Number 1 is overshadow the line between personal and business finances. Number 2 is disregard for accounting practices. Number 3 is declaring revenue before final delivery, not taking all costs into consideration. Number 4, mismanagement of capital expenditures. And lastly, failure to analyze your financial statement. If you can put all this into practice, I'm very sure you will not run helter-skelter to look for finance for your business. And I'm very sure you will be on top of the management of your cash flow and your working capital. Well, just check below this video and sign up for the sources that can be given to you, and you'll be hearing from us from time to time. Thank you for listening. Until I come your way next time, I remain yours faithfully, Peter Popola. Thank you.